And it's the first one for the week, 10 a.m. right here in Lagos, Nigeria. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live from Channel's headquarters right here in Lagos. First off, let's get to the top stories that set your agenda for the day. As part of efforts to boost foreign currency liquidity in the economy and strengthen foreign exchange, the federal government has concluded plans to securitize about $7 billion of the country's dividends from the Nigerian liquefied natural gas, NLNG. The government expects to get about $7 billion from a consortium led by Standard Chartered Bank from this week. And the federal government also expects an inflows of about $3 billion emergency loan from the African Export-Import Bank, with the Nigerian National Petroleum Company had secured 2 months ago, bringing the total inflows expected in the short term to about $10 billion. Join us for quick analysis now is Mr. Olatunde Amolegbe, Managing Director, CEO, Arthur Stevens Asset Management Limited, and former President of the Chartered Institute of Stockbrokers, joining me via Zoom. Great to have you on the show. Good morning.
Good morning, Ladi.
Fantastic.
To be here.
Yeah, so can you explain briefly now the process of this securitization, the benefits and attendant risks that come with this?
Well, typically, securitization is a financial term used for the process of putting together obligations such as loans and debts and selling them off, in the form of marketable securities. So, for instance, let's say a bank has some loans on its books that it would like to get rid of. It could package them in the form of marketable securities and sell them to interested investors, in return for liquidity, immediate liquidity. Of course, those investors that buy those securities now get exposure to the debt that have been sold off, and they can expect to earn principal and interest on the securities they bought. Now, it's not only debt that is securitized typically. You could also securitize assets that are on the books of the company. And as we have seen, now from what the federal government is proposing with the Standard Chartered Group, you could also obviously securitize expected revenue. So if you have cash flow coming in the future, you could securitize it, package it in form of marketable securities, and receive the liquidity now. Such that, the people providing you the liquidity at the present moment can expect that, they will get paid back their principal and interest, in the future. That is covered by because, the expected inflow.
Yeah, because normally I'm used to, securitizing, debt, but this time we're securitizing dividends, which is quite interesting. But what is the expected role of, financial institutions, investors, and other stakeholders in this whole securitization process of these dividends from the NLNG?
Well, we know it's been done by the Standard Chartered Group. I will assume that there are some local, market participants that are also coming along with this, because in doing this, it is important that we also use it as an opportunity to exchange ideas and do a bit of, knowledge transfer. We do not have complete information as to who exactly are the people that are going to ultimately be holding these securities at the end of the day. It could very well be that the consortium will be holding it in its books, or it could very well end up selling it on to foreign or local investors. Be that as it may, whoever the securities end up in their books will have to provide liquidity to the government immediately. And I think that is really what is important at the moment.
All right, very interesting. We'll definitely keep tracking that right now. And let's see, what are your expectations for investors? How do you see them reacting to this? Do you see an oversubscription in the works?
Yeah, I mean, if you look at the structure, from what I've read, the typical dividend that used to come from NLNG is something to the government is something in the region of $6 billion. But I understand that had fallen to something like $2 billion recently because of the drop in the production of oil and gas. And, and that for me seems to be a conservative enough figure such that the borrowers can feel comfortable that enough revenue is going to come in the future to cover their principal and cover their interest. So they really do not have, I don't think they have too much to worry about, but of course you never know what happens in the future. For Nigeria, we get the liquidity, we're able to use it to stabilize our economy and stabilize the FX market.
Right.
There will always be the risk. There will always be the risk of default, unforeseen default, and but that might be, sometime down the line. So all in all, I think is a positive.
Right. Thank you so much.
It's a positive for the market, and from what we saw, on Friday, it seems that the market is already reacting positively to it.
Right. Well, we'll keep tracking this whole process. Thank you so much, Mr. Olatunde Amolegbe, MD, Arthur Stevens Asset Management Limited. Thank you so much.
Thanks for having me, Lady.
All right, now let's take a look at some other stories now. President Bola Tinubu has declared Nigeria's readiness to partner with willing governments and investors, saying Nigeria has improved its business environment and is going through several reforms. The president made this declaration while meeting with the German Chancellor, Mr. Olaf Scholz, who is on a two-day visit to Nigeria. Following discussions with President Tinubu, the Chancellor paid a visit to the ECOWAS Secretariat, where he also had a closed-door meeting with the ECOWAS President, Mr. Omar Toure. Take a listen.
You know this, about 90 German companies are present in Nigeria today, and they have already created 17,000 jobs, much more to come if we are successful in the things we do. And this is the same with the Presidential Power Initiative that is at work since a long time now, and it would be a very good thing if we can now start with this implementation.
The NLNG also to facilitate the shipment of liquefied gas to Europe is well discussed and in advance. We have an eye on this.
If there is a better chance for exporting the produced gas, for instance, to other places with enlarging the LNG capacities, as you mentioned here, I think this is also then a question for German companies to do their special private business and doing contracts with business companies here in Nigeria.
And with the double whammy of high inflation and currency devaluation, Nigeria's aviation industry is feeling the pressure right now. And that's the holiday season approaches. Travelers are starting to plan their trips and book their flights, but cheap tickets are no longer available as airfares have already risen by 100%. Let's talk to Professor Obiora Okonkwo now, an officer of the Order of the Federal Republic and MD CEO United Nigeria Airlines, joining me from our Abuja studio. Great to have you on the show, sir. Good morning.
Thank you very much. It's my pleasure to be here.
So we've seen the unification of the FX markets. We've seen that cause a devaluation at the official window. How are the distortions in the FX markets, impacting the aviation industry right now? How are these distortions impacting, operating costs?
Well, thank you very much. It is obvious that aviation industry in Nigeria is not insulated from the negative impact of unification. We exist in Nigeria, we operate in Nigeria. So whatever applies in so many other sectors, we also feel the impact. But the unfortunate thing is that the impact is worst, I think, on aviation industry because, like I've always said, the currency of aviation industry is dollar, and 95 to 98% of what they require to keep it going is in dollars. And it's not like dollar you need every year, it's dollar you need every day, because anything could happen. Most of the obligations in the industry is done Every month you have lessons you have to pay, you have other commitments, you have trainings, so it's very huge. And for that reason, we have been caught in between, the high cost of the fares and then, the tax load. It is not the intention of operators to increase the prices. We would rather want to remain at affordable cost that will allow tax load. Because the mathematics of aviation is that at the end of the day, is the yield you have. There is a cost for every passenger seat. So if I carry 10 passengers at 1 million naira from Abuja to Lagos, and then I have about 90% of my seats empty, it does not pay me. I would prefer to carry 50,000 passengers, full capacity, and then be able to break even. So it's a tough time, it's a difficult time. When there was this idea of unifying the forex rates, we were very excited about it. But the rest is history. You can attest to the fact that the differentials in the rates still exist. So it is really a very, very tough time for the aviation industry. And we have been calling on the government to look at this situation to avoid some crisis that might just cripple the economic activities, because flying, for people to be able to do their businesses, they have to fly. Apart from the fact that the roads are bad, insecurity in the roads, people need to fly, and aviation is the catalyst for the economic development. Stop 1 day flying or 2 days flying, there'll be crisis all over. Social development, people who travel for businesses, people travel for pleasure. So we are really, really in a fix, and we hope that the good news we are hearing about the government intervention will make Forex available, and when it makes it available and we can access it, that's all we are looking for.
All right, Prof, and definitely we're all looking forward to that $10 billion that's supposed to hit the Nigerian economy soon. But let's talk about the FX market now. Looking at, are there any short-term solutions that you think can be tailored to help the aviation industry? Right now we know it impacts every industry, but what kind of short-term solutions do you think are available right now, specifically for the aviation industry?
You see, we, the operators in the aviation industry, we have always said and maintained that we're not a beggarly sector. We don't beg for subsidies. We don't beg for free money. The only thing we are asking for is that if government has said that the IE window rate is $700, $800 naira to $1, create a special window for the aviation industry to assess it. The case we are facing here today is that we don't have access to that CBN or bank rate. We don't have access to those funds. So we are forced to be scampering for foreign exchange like other importers. But the difficult thing there is this: aviation is highly regulated all over the world. If I have to go to deal with any person in aviation, reputable companies all over the world, they have to do a thorough KYC, know your clients' verifications. So for that reason, they expect all your transactions to be coming from your own bank account. If I have to source money from somebody in the US, he wouldn't want to send the money to Nigeria. We have had cases where we had paid some money for somebody, and the person makes an attempt to send it to our own account in Nigeria to be able to pay our partners, our associates overseas. The person's account in America was blocked, and the account closed. We have the money stopped, not once time, not 2 times. So if you source money from other sources, the receivers of that money, your partners overseas, must have to do KYC on who is sending them money. So if I am an aviator and then I'm subjecting somebody who is just selling IIE funds to me to face scrutiny of KYC, why should he sell to me? He's ready to, there are other producers in China and other parts of the world for traders who want to import one or two things or the other, they have a lesser restriction in the way they receive money. So what we are looking for really now as a short term in the industry is that government should take aviation as a special sector, pay special attention, and make sure that we access funds that are coming officially from CBN through the bank, not at any special rate, at the rate government has determined, but let it be made available to the aviation industry so that we reduce this waste of time and scampering for foreign exchange like other importers who have lesser problems to deal with their partners. I think that should be short term. On the long-term basis, it's a good news that government is bringing in some funds. Nigeria is basically a very, very solid and credible country. There's no doubt that our ratings in the recent time has dropped, and the ratings of country affects the local business because you can never be rated higher than your country in the international world. But however, this the government is doing, I still see as a short term. We should be able to look at the long-term situation to this. Borrowing is good, but they should be able to be courageous and start engaging the institutional lenders. We should be able to renegotiate, reschedule our loans. When we reschedule and renegotiate our loans, then government should have less pressure to spend some interest or payback within this very long period. And I think we are paying about $600 million or $800 million every month to our lenders. If you renegotiate or reschedule all these things, it could come to about $300–400 million, and the money on top of it should be able to go back to the forex market. It will reduce the pressure. But they should also be bold enough to even ask for debt pardon. Let some of these people who show they love us be able to wipe up some of this debt from us. That will help a long way, because the more money we borrow, the more pressure on government to pay interest in a short term. But however, the good news is that if these things are done in a short time to stabilize the economy, stabilize the exchange rate, it will bring back the foreign direct investment or foreign portfolio investment that we have lost in the recent time, and more especially diaspora remittances, because most people may think that all that has been stabilizing our economy in the last decades have been oil. It's not true. The record shows that 70% of foreign exchange that we have been dealing with in this country are coming from either FDI, FPI, or diaspora remittances. You may be shocked to know that they come because some of these diasporans earn their money in foreign exchange, bring it here in local bank, change it into Naira, put in a fixed deposit, get about 10 to 15% interest rate, and then they convert it back to dollar when they need it. But today it's not the case. When they bring their money, put it in a foreign exchange in a Nigerian account, and they get 10% increase, and within 6 months, dollar moves from 600 Naira to 1,300. They have lost all the money. So these are the problems. And because these are moving so fast, some of even domestic market women, they make money and they buy dollar because nobody trusts what Naira will be tomorrow.
Right, Prof.
All these things are because people are not secure with things the way are going. So I hope that with this good news, government will make sure that this becomes a reality quickly, and they should move very fast to control the narratives. The narratives and the things, I believe that the rate of Naira today is speculative rate. It's not the real value of Naira. Some people are panically buying this currency because they are not sure of what will happen tomorrow. But if government will implement this 10 billion Naira funds, take care of this from now, control the narrative so that people will not be reading the front page news that Nigeria continues to fall.
Right.
It's falling again, and then people if they have hope. Most of these funds that we are looking for, they are in different wardrobes all over Nigeria. People are keeping them, and if they want to buy Panadol or if they want to buy pepper in the market, they'll go and change small money and buy and keep the rest. So I really think the government should come very quickly and take care of the situation.
Yeah, let's get all of that.
Things have been done about that.
Yeah, let's get all of that FX, back into the banking system. But let's talk about airfares now. I remember a few years ago, economy class tickets felt like economy. They were cheaper. But now, economy prices are like business class tickets, before. How are you seeing demand? Is the average Nigerian traveler, still resilient at this time? And what kind of conversations are being had to address the affordability issue, or should travelers just have to deal with it?
Well, it's really quite unfortunate. Like I've said, we want to have the travel ticket at a cost that should be available, at a cost that could be affordable for people to be able to fly, and then you say have minimum pax load to break even. But unfortunately, the benchmark of aviation ticket is in US dollars. So technically speaking, if you say that the cost of traveling was 15,000 in the past, you are right. But that could have been when Naira was 150 Naira to $1. If you say it was 20,000 in the past, you are right. But that could have been when Naira was 200 Naira to $1. So basically, at every cost you are paying today, benchmark it over and above US dollars, and you'll see that even now, if you are paying for ticket for 100,000 Naira, you are still paying less than $100. And if that is the case, the cost is going to the operators. We are losing money in many routes because the tickets are still underpriced. So basically, if Naira comes back to 500 Naira and the ticket comes back to 50,000 Naira, we will all be happy, because what it means is that we are still getting $100. All over the world, if you make a 1 hour, if any commercial flight takes off and land, whether it's 30 minutes or 1 hour, and it's less than $100, it should be a big loss. Yes, you may say you might get $50 ticket to fly somewhere. That's correct. But if you look at that $50 ticket, it might just be 5 seats in a 150-seater aircraft. And you'll be surprised that the next person sitting with you may have paid $500 on the same journey. So the airline is making up that money less from the money you paid $50 is making it from the man who paid $500. So at the end of the day, if you now do the yield, it still comes back to average of $100 and $150. That's where it works. So basically speaking, what I'm just telling you today is that at the rate you are still buying your ticket, is still so cheap. It's still a big threat for the survival of the aviation industry, because viability of the sector guarantees the security of the sector, the safety of the sector. So Nigerians should still show their love, like I've always said in some of my other outings, to the operators who have been bearing the shock and the burden. And I hope the government should appreciate this and know that we are playing a critical role in stabilizing and reducing the burden to the ordinary Nigerians. Just look at it. If you get into airport and you want to have a decent VIP car from Abuja Airport to town, you should be paying about 50,000 Naira. That's just about 15-20 minutes drive on the ground. So if you are paying 100,000 to 150,000 Naira for 1 hour flight on the aircraft, it's really not very expensive compared to the rate of the dollar. So unfortunately, in Naira terms, it's huge, but in dollar terms, it's even less than what you were paying before. So that's the situation, and I hope that the passengers will understand that they need to cooperate with operators this time, because we should be able to give them this service. There's huge demand from the maintenance. There's huge demand from other obligations to get their aircrafts fly, and that's what we're going through today.
All right, definitely. We're hoping the average consumer and average flyer stays resilient because they're really squeezed from all angles at this time. I want to thank you so much, Professor Obiora Okonkwo, CEO, MD and CEO, United Nigeria Airlines. It was great having your perspective this Monday morning. Thank you so much.
Thank you very much, but it's very good to have on record that the most resilient industrial sector in Nigeria in recent time has been aviation. And I hope we will survive it because there is always limitation to what you can take. Yeah.
Yeah, I hope we all survive. Thank you so much, Prof. Thank you.
Thank you very much. Yeah.
All right, now let's talking about survival at this time. Most investors in Nigeria are urgently looking to hedge against inflation and currency devaluation. Many asset classes have been touted to be that hedge, but with inflation at 26% and projected to rise even more, some are projecting about 30% next. It's getting harder to beat inflation in Nigeria. Let's see how the real estate sector is faring so far. Join us for this conversation now is Mr. Paul Erubame, President, Association of Facility Management Practitioners, joining me right here in the studio. It's great to have you. Good morning.
Thank you. Good morning.
Yeah, and as you heard from my previous guest there, he's praying for the survival of his industry. I'm praying for the survival of the consumers and the passengers, and I'm sure investors are looking for survival.
Yeah.
At this point, we've talked about different, asset classes that can hedge, against inflation, and the number one they always talk about, apart from gold, is real estate.
Yes.
And we're seeing inflation up about 26%.
Yes.
How is inflation? How is the real estate sector faring as a hedge?
Well, the real estate sector is a very formidable sector in terms of value preservation because of the intrinsic valuation that goes with land itself. So in terms of business and investment decisions, because of the land connection to that investment, there's resilience in the real estate sector.
And do you see, because at the end of the day, we're talking about some rentals here. We're seeing, short-term stays are getting quite popular, at this time. How are they keeping up with the inflation numbers at this point?
I think inflation is a general thing. All prices generally go up, and when these prices go up, it's going to affect
when
all
it's going
sectors.
up so fast, it's
yes.
going up really fast.
Definitely,
ridiculous.
Definitely, and the rise of those kind of prices, the impact on the lower and middle class, consumers of this real estate sector is the biggest challenge we're having in that area. The prices are going up. There's more supply on the luxury or high-end real estate sector, and then the occupancy is also dwindling because when the economy is having this kind of friction or challenge, then you see businesses, scaling down, and so there will be more vacancies over time. But that particular sector is not the one that is really highly impacted in terms of the human impact of this inflation. It is this medium and low class residences, SMEs that have to also compete in the same market where they don't have the funds to deal with such high costs.
What would you say is the best strategy now for an investor, trying to use, real estate as that hedge? What's the best strategy to go about this and to get the best benefits?
Okay, so over the years, real estate has been working in isolation of the long-term, what we call a life cycle approach. People just see real estate as a business, you dump money into it and hope to get returns, quick returns. But long-term life cycle approaches will be better for investors now. Have an operational readiness and sustainability mindset when planning those investments because future operational costs, future quality and experience of the end users will ensure that you have, increasing value for your investment. If you do things that, dump things into the market and people buy it and have buyer's remorse almost immediately, you hurt your brand, you hurt the sustainability of that particular business itself. So engage facility management early in the process, so that there's an operational readiness plan, there's a capital improvement and replacement cycle put in place, there's long-term sustainability of that investment. So you don't just plan short-term. Real estate is not a short-term kind of investment. You need to think about the whole life cycle. And to do that, your investment should not just be what it will cost you to deliver on the project now, because that's where investors are getting it wrong, right? Within a short while, degradation curve sets in, all kinds of maintenance issues crop up, and people are beginning to get a bad taste from investing in that project, and before long you're having value erosion and devaluation of your assets. So if you incorporate facility management on time, have a strategic facility management planning framework in place, then you can use that for the long term and make a lot of returns. So you see in the market there are basically two classes: the ones that are running down and begin to attract less and less in terms of returns, and those that are continuing to attract a premium because of what they have put in place in the area of facility management. So this is a core area that investors should be looking at. Don't throw your money into an investment where you are not sure that the facility management and the operational readiness and sustainability has been guaranteed.
Fantastic. And talking about a bad taste in the mouth of investors, now we see the Lagos State government has embarked on a round of demolition of illegal structures, and definitely we've seen investors cry because of this. And I'm wondering, why are some of these investors building illegally on some of these parts?
Good question. So I believe that there should be thorough investigation on how these kind of constructions came up in the first place, right? I don't believe demolition is the solution. If you demolish and somebody was a victim, he should be compensated. But if that person was part or an accessory to a crime, because when you violate there's a code, there's a design, there's a layout, there's an approval process for all of this. If you violate that, demolition is just one step. You should be prosecuted as well, right? So we should think about it as a way to bring about deterrence. People should be better due diligence before they put their money into investment. Sometimes we do this consciously. We just know that this is illegal.
Because I can imagine, you're a young man, you just managed to raise money to put up that property, and it's demolished right before your eyes. That's heart-wrenching.
And that's why I'm talking about the prosecution aspect, because the developers are not the ones whose funds are mostly tied down. They sell off plan, for example, and then by the time they develop, a lot of people have their investments.
Do we blame the developers here?
Of course. They have to do more due diligence. They have to better due diligence. If you get people's money to put into an investment and then you've not done the proper legal documentation and approvals, and the thing goes down the drain, you should be liable. I also want investors, individual investors who are investing in this
Should
schemes,
the developers refund those buyers?
That's where we are going, but would they? If it's now demolished, it's almost a force majeure kind of situation. It's not my fault, this has been demolished, right? So you who want to invest in those kind of schemes, also do your due diligence. It's not because, an investment looks good, you just go and dump your money into it. You must do your due diligence. You must find out if that property is sitting on land that's approved for such a purpose.
How can a buyer really find that out?
Oh, there are consultants they can use for that. There are consultants that can walk through the lands registry records, bring out proper documentation that verifies that this is not going to have an encumbrance in the future. You have lawyers and architects and quantity surveyors and town planners, that do all those.
They'll be able to identify such.
They tell you if it has issues, if it doesn't have issues. But some people know there's a gray area in these developments, and because the pricing is good, they think they can make a quick cash out of the investment, and then they get in.
So sad. I really do not want to be in that kind of position. But let's look at the credits to the private sector. Now we see it's fairly improved from about 54.7 trillion naira to 58.6. Not a bad improvement there. But how much of that is the real estate sector getting?
The real estate is really awash with investments. A lot of developments are going up, and there are two ways to look at it. A lot of these investments are going up in areas where infrastructure is really poor. Okay? So the final cost of delivery, I mean, you take a loan, you have to pay interest on it, and then you're basically building your own infrastructure, power, roads, water, and all of that, right? So the eventual landing cost of those, projects is going to be high, no matter how much you get a loan and investor funds at a discount. So that's the first thing. And then the second one is what I talked about earlier, about having long-term facility management plans in place to ensure that these investments don't just end up as, more white elephant projects. Because when the money is in the system, people just build, right? And they end up building so much that you would expect that occupancy rate should also be high, but that's not matching. The rates of new developments and their occupancy is not following. It's not corresponding.
So that means at this time we're not seeing that much demand for most of these built properties.
Exactly, because much of these funds will go into high-end development because of the final cost.
So nobody's looking at low end.
Exactly. There's a huge gap in that area. Huge gap.
And I'm sure there's good profit.
There will be good profit if you don't have to build your own infrastructure. If you have to build 1,000 units of, low income housing, for example, but you have to run highways to it, you have to build water infrastructure, you have to create power infrastructure for it, it turns it automatically into high end. So
right.
That's the problem.
And talking about high end, definitely we're also dealing with an energy crisis at this time.
Yep.
And I'm wondering how most of these service apartments are managing, how the facility managers are able to manage the rising energy costs to provide power.
Much of the energy we are generating and using right now is going to waste. So the first thing that facility managers are looking into now is energy efficiency. There is so much talk about, right sizing of your power generation system. Again, back to the infrastructure issue. If I have to depend on the grid for power, it's a lesser evil to deal with. But if I have to create my own plant, install my own generation equipment and depend on it for more than half of the time, then I'm having a huge cost to deal with, right? So now we have that as the first problem, the infrastructure problem, and then we now have the efficiency issue. Much of the estates and facilities that we're managing today are based on aggregate billing systems where you just know what your total bill at the end of the month or total usage in a single meter. We are looking at working with facility managers and the real estate sector to go into energy efficiency. There's a lot that can be saved. From the audits that we have done for most of the facilities we have done energy audits for, we found up to 35% energy being wasted in non-value adding activities, right? And this energy loss or wastage is just invisible. Nobody sees or knows what exactly is, contributing to that, overall energy consumption, right?
So if you're able to manage that wastage, that means you can have enough power and cheaper?
Exactly, that's the point. That's the point. So once you have that efficiency, you've taken out the waste, then you can now have a properly sized generation equipment, right? Instead of having a large equipment, that you don't need, you can have a properly sized one. And then the fuel efficiency of your generation equipment becomes, less because you're not going to be powering, fueling a big equipment. And then again, you now have better accountability for the energy that you are, putting out in the system. Some estates today are almost going to, kilowatt hours rates for self-generated energies running in the region of 500-600 naira per kilowatt hour, okay. which is very, very high, because if you look at how much energy you need to run a typical 3, 4, 5 member family dwelling, and you have to buy a kilowatt hour unit of energy for 500-600 naira, you know that that's a major drain on the resources of such a family.
Quite a major drain. But talk to me now about, association like yours. What is the role of, these associations in advancement of practices, in the Nigerian built environment?
Okay, so the first role of associations like the AFNPN In the built environment, we have the town planners, we have the designers, the architects, we have the quantity surveyors, estate surveyors, we have the builders, we have the facility managers, and we have the construction and project management associations. Our role, together, is to ensure that we train and manage professionals who know what they are doing, because that's where the expertise, the knowledge to actually bring best practices into the industry comes in. And then we also ensure that there is a level of standardization. This standardization is not really true regulation. It's more of working with ourselves to imbibe, adopt, encourage ourselves to apply best practices. That network, that influence, benchmarking that we do with ourselves will help to, keep raising the bar of quality deliverables and quality experiences for end users and investors. So that's the primary responsibility. But beyond that, we also have the responsibility for advocacy. Because we are subject matter experts in each of these built environment domains, we consult for the government agencies, for private organizations, investors, and all that. Because if they don't talk to us before they do much of this investment that you see, you see that you invest and it goes down. Basically you are repairing and trying to pick things up again because you are not working with the professionals in the industry. So we maintain databases of people who have been certified, who have been accredited, to practice in any of these built environment professions. And for facility managers, we hold a very unique position in the industry because from all the other professionals, they deliver to who? To the facility managers to manage through its life cycle, right? So our involvement in the way things are coordinated, decided, in all of these other professional outputs is very key, because the final output is what we deliver to our customers, the end users and investors.
And you give that facility a longer life cycle.
Of course, definitely.
Thank you so much. It was great to have you, Mr. Paul Erubami, President, Association of Facility Management Practitioners. Thank you for your perspective today.
Pleasure. Thank you.
All right, so head to the markets next. Definitely, it was quite an interesting week for the markets last week there, but we'll take a quick break now. When we come back, we head straight to the markets. Do stay with us. Welcome back. Let's head straight to the markets now. We have John McQuarrie bringing us the details live in the studio. Great to have you, Ini. Happy New Week.
Happy New Week to you. Good morning,
trading week.
Yeah, trading week. Thank you so much. And we look at FX today. I know FX has been all through your conversation.
Right.
Almost all through.
It's all about FX right now. Can't talk about anything else.
Yeah, and last week, some things happened to the value of the Naira. I don't know, some people say it was because of the Supreme Court's final judgment. Right. That brought kind of certainty. Mm-hmm. Well, I don't know, I'm not an expert.
It didn't last really very long though, but boom, and yeah.
Well, don't worry, we have some things coming up. I know you know about the NLNG dividend securitization. Exactly. We're also looking forward to the $3 billion from the Afrexim Bank.
10 billion in total. We're all looking forward to that money.
We have plans, don't worry. All right, so let's look at the numbers right there for the FX market. Last week we see NAFEX, that's the price gained. There you have it, more than 2%. To close at 801 Naira 15 kobo. That's what it closed with at the close of trade for the NAFEX market. Let's see the other market. We know that, the market that we don't officially recognize also made some moves. In fact, it was the first to react, whether it's to the announcement from the federal government or to the Supreme Court judgment. It was the first to react. That was the P2P, and I think a lot of people couldn't ignore it. They had to talk about it last week. So I'm looking at the general transaction for the FX market. Last week, is FX turnover for the week ended there. We saw that it was a total weekly of $620.93 million of daily average, and a week-on-week change, almost 50%. Something must have happened in that market last week. I think we have Dimeji Obasa now joining us. He's a fixed income dealer with Axis Bank PLC to give us a little bit of flesh to all of these numbers. Hi, Dimeji, good morning.
Hi, good morning, Amy. Thank you for having me.
Yeah, so last week we saw that the market added there almost 50%, 44.38%. What really happened? The market was very noisy last week. What are some of those driving factors? Some people say it's the Supreme Court ruling that brings an end at least to that uncertainty. But I mean, what do you see and what did you hear?
So last week, what we saw was a significant increase in turnover. This was more from market participants that had access to capital offshore that they were able to bring into the market to settle their own trade obligations. Towards the end of the week, however, we did note significant improvements in the rates, both in the official and parallel markets. And this we can attribute mostly to not just the announcement by the Minister of Finance, initially stating that the country had line of sight to about $10 billion in FX inflows that we can expect to receive in the coming weeks, but also the news that filtered into the market about exactly where the funds will be coming from. Like you did note, about 7 billion of that 10 billion will be coming from securitization of receipts due to the country, from a consortium of investors. And then we also have the 3 billion that we had news that we had heard about earlier in the year, or earlier in I think it was last month or so, that's supposed to come in from Afrexim. So this sort of gave the market confidence as to exactly where the funds will be coming from, and it's now seeming more of a reality that we will expect that these inflows will come in, and what you then would see would be that the market would trade ahead of these inflows by being bid on the naira.
So I mean, certainty obviously, because the market feeds on information, so this certainty obviously has given the market some breather. But do explain to us, no cost attached since the federal government is securitizing its dividends. There's no cost to the country?
Well, I mean, it depends on how we look at it in that sense. The cost to the country, in a way, would be that we would be losing that future revenue or that future cash flow that we would have gotten from the dividend proceeds, right? On the plus side would be that we are able to get that money upfront and in bulk by the proceeds of the securitization process once it is concluded. So it's almost you can then look at it as some of the pros and cons, and looking at the fact that we'll be getting the cash flow upfront. The government is able to then use that bulk sum to defend the naira and stabilize the FX exchange rates, and then you can have that as a plus. On the minus side would be that what we will be foregoing will be the cash flow that we would have earned from the dividend in future.
Yeah, well, I guess we have to pay for it one way or the other. And if it's a small cost, I mean, and then we have stability in the FX market, it will go a long way to solve a lot of problems. Thank you so much, Dimeji Obasa, for your time and perspective this morning.
Thank you.
All right, so Ladi, there you have it. So more news. Obviously, the market lives and breathes on news. Yeah. So with this news now, we see the market calm down a bit. But I guess the next thing that the market will be waiting for is for the actual flow of that fund into the market. Because remember, we've had the announcement of unification of the FX for months now, but it's not yet unified. So, I mean, investors will always remember that there's a difference between announcement and the implementation. And
seeing it. Right. Thank you so much, Eni, and definitely we're all hoping and waiting for that inflow. Thank you so much.
All right, thank you.
All right, now, take it on to the UK now. Let's take a look at what's happening there. We have Juliana standing by. Great to have you, Juliana. So it's a brand new week What market moving data are we expecting in the UK?
Good morning, Laddie. You're right, it's a brand new week. Worth mentioning as well that we're no longer on the same time zone. British summertime has come to an end, so it's 9:50 in London, just making you aware of that. But when it comes to the markets, the big one, of course, this week is going to be the Bank of England Monetary Policy Committee gathering, which takes place on Thursday at Threadneedle Street. There are big choices for the Bank of England Governor, Andrew Bailey, this week, because, of course, we are still battling pretty high inflation. It is at 6.7%, not as high as it was in the beginning of the year, or even if we go back 18 months when the Bank of England started its most aggressive tightening cycle in history. Interest rates have gone up from 0.1% to 5.25%. Now, they did put it on hold in September, so we didn't see any hike there. But since then, inflation was sticky in August at 6.7%, so it didn't move. And we are seeing the war in the Middle East is having a major impact on the price of a barrel of Brent crude oil. But, of course, we know that hiking up the interest rate is really affecting the mortgage sector. In fact, we had data last week, which I discussed with you, from Lloyds Bank, who forecast that they don't necessarily see house prices move in this country until 2025. Of course, all of these issues have a knock-on effect on the economy, which, again, is teetering on a recession. So big week. Of course, whatever happens now that the ground invasion has started in Gaza is also going to have an impact on the UK economy. So we're going to be as busy as we usually are, Laddie.
Thank you so much, Juliana, for the update. Thank you. And over the weekend, Channels TV and my humble self bagged an award at the Africa Crypto Giants Awards, as ACGA Awards 2023 was held over the weekend. Take a listen.
Nominees for ACG Awards Best Crypto-Friendly TV of the Year. And the winner is Channels Television. Nominees for ACG Awards Best Crypto Presenter. And the winner ACG Awards Best Crypto Presenter is Lottie Williams.
Yeah, a very big thank you to the organizers there. We are quite humbled, therefore, that award. But let's take it to the crypto market now. We see it's green there for Bitcoin and pockets of red in the market. But let's bring in Rume Ofi now to bring us up to speed on what's going on. Great to have you, Rume. Good morning.
Wow, congratulations first before the morning, because that comes first.
Thank you, Rume. Thank you. So, yeah, it's been quite an interesting month, for Bitcoin. October's winding down now. How do you see price movement, price action? And it's all about the spot Bitcoin ETF approvals. How do you see that impacting price action in October? And what are you expecting for November?
So the market has actually done 16%, if you ask me. And it's a good thing. The numbers are really interesting numbers, 16% in October. Thereabout, and 6 months to halving. We saw the fake news that came out that BlackRock Bitcoin ETF has been approved, and the market actually went on a ride there. It's a very good thing. The SEC has also they are looking towards considering between 8 to 10 Bitcoin spot ETF under their review. But again, that is not to say that November is not going to be some time to really evaluate, because on the 1st of November is the FOMC meeting there towards to see if interest rates is going to be increased, because it has been an interesting increase spree at some point, which also have issues to do with the Bitcoin, because the Bitcoin industry is a young industry that actually also depend on some of the things that happen in the traditional financial market. So all of this put together is to keep fingers crossed to see, because the Fed wouldn't want to increase interest rates in a way whereby the U.S. economy is brought into a recession, which will also spin to other economies in the world. So it's a way to manage it. So I'm seeing it in moderate way if it is being done that way. But looking at from this year, yeah, it's already gone. So probably next year we could see some interest rate increase again, if possible. Yeah.
Right. So much to look out for definitely in November. I'm sure investors are hoping they can make a lot of profit in November. Thank you so much, Romeo. Always great having your perspective. Thank you.
Thank you, Laddie. Always a pleasure.
All right, so that's it for the crypto market, and that's it for the show today. Thank you so much for watching. Don't forget to join us at 1:30 for Business Incorporated for more updates in the world of business. And you can watch this again on our YouTube channel. You can also get more details on www.channelcv.com. Thank you for watching. I'm Laddie Williams. Bye for now.